Hello, investors. This is Ted Zhang and Connor Bates, Associate Portfolio Manager with Revere Asset Management. Today is Sunday, July 21st, 2:55 p.m., coming to you from Fort Lauderdale with this weekend's Revere Roundup weekend walkthrough. So jumping right into it, the state of the market, we're still in an uptrend overall, but we're starting to see some distribution, and the short term is definitely under pressure. So the trend gauge, we have market leaders in a bearish downtrend. We've seen many stocks just see failed breakouts or just collapse under their bases and see mass distribution. Stocks are breaking their 50-day and their 10-week moving averages as well. Short term, the Qs and S&P are below their 21 EMA, or the S&P is right just about there. So we have that as neutral. But if the S&P continues further down, we'll have to make that bearish as well. Everything's still above their 50-day and 200-day, so we still have those in a bullish up arrow. So as always, the S&P charts first. We had one distribution day here and then followed by further selling. Now we have one lower low, two lower lows, three lower lows, close below the 20-day, but on top of this previous shelf. It seems that the 50 days most likely inevitable at this point. On the weekly, we also had an outside week on volume, and that is definitely not what we want to see. Usually that's a marker of a longer term pullback or maybe even a correction. Equal weighted, we broke out and it looked really good at first, but we reversed the entire weekly move and closed back within the base on huge volume. So that's not what we want to see on the weekly chart, but the daily still looks like a relatively healthy pullback, finding support the 10 EMA and in the peaks of this part of the base. So we're just going to monitor this and see if we can see some tennis ball action and get back into highs. The Qs, with the S&P making a new high, the Qs had this huge distribution day, and then we had 3 days trading within the range. And then all of a sudden on the ASML news, plus the Biden Trump news, in terms of trade, we had that gap down below the 10 and 20. Now we're just leaking off here, and it's on really high volume as well. And then the weekly, we sold off as well back to the 10-week on high volume. So definitely not what we want to see in the short term and medium term. But this by no means that the trend is over. We'll just have to see how we act around this 50-day area. The QQQE, so far a failed breakout, which is definitely not what we want to see. Outside week reversal on high volume. Mid caps, similar to RSP, made new highs out of this base, but we closed back in it. So you need to really see how this acts right here. This is a crucial level. IWM is definitely stronger. We broke out of the base, and even though we have this upper wick on high volume, we still closed in new 52-week highs. So IWM on this pullback is definitely one we are focusing on. And the Dow closed at all-time highs as well, but like the other indexes, had this upper wick. VIX started to spike as well. I think that there might be some price glitch here because it did not hit 10 this week, but we're starting to break out here. And this is the second longest period of time since 1990 where the VIX hasn't made a 150% move. So sooner or later, we're not predicting it's right now. Volatility is due in the markets. F&GS, the proxy for the mega caps, huge sell-off, almost back to the 50 on volume as well. Our Big 8 index, same thing, back to the 50. Our RGA composite, similar to the IWM, MDY, and RSP, a large upper wick, closing back in the base. And so this is a very key area to see if we can hold the breakout and continue higher. Yields, nothing too much to talk about in yields, just a mean reversion rally. And then bonds pull back after a strong move higher. And what bonds is really signaling is that the markets are pricing in some rate cuts. And when I get to breadth, we'll talk about the Fed swaps quickly as well. The dollar slid off as well with the rates. So far, rallying back in the 200, just chopping around, which is actually what we like to see. And then gold also suffered a failed breakout. We're going to need more time in the space, is what it seems. Silver, definitely worse action than gold. Didn't even break out, and we're back to the low ends of this range. Still acting fine though. It just needs more time. Copper, though, is a lot more ominous. We saw this huge weekly bar sell-off back to the 30-week moving average, 150-day, and we broke out into all-time highs and quickly failed. So that is definitely not what you want to see. Maybe Dr. Copper signaling slower economy ahead, which is what the data is showing as well. So we'll have to definitely pay attention to there. Crude oil, still just chopping around this area. Nothing too much to talk about here. And same with gasoline. Just a lot of chop in this range. And then Bitcoin. We've been talking about this undercut and reclaim level of 56,500. And once we reclaimed that, held, we had a quick rally off these lows, reclaim the 200-day and back in the middle of the range, middle of the base. In the near term, definitely a little bit stretched. Some sideways action would be really nice to resolve this time compression and maybe build out a nicer and more constructive right side of this base. And then Ethereum ETF is likely going to start trading in 2 days actually from reports. So that will be interesting to monitor as well. And then Solana, the big three, the top three, is definitely acting better than Ethereum and Bitcoin. This 190 levels is what I'm keying in on here. Going into some breadth, we had an explosion of net highs with the smaller areas of the market participating. But after the sell-off, we've definitely seen a dry up in the New York Stock Exchange, but no net lows yet, which is good to see. NASDAQ, we had explosion of net highs, but now we're back into net low territory after this recent distribution. So something to monitor. We definitely don't want to see more net lows come into the markets. That could indicate that we had a fake out to the upside. NYSE and NASI in overbought territory and starting to flatten, and same with the price of it. And if this starts turning down, that could lead to more pressure as less and less stocks are participating in markets, and more stocks are declining. We resolved the bearish divergence in the percentage of stocks above the moving averages, and we're starting to pull back here, which is normal after a huge thrust. So this is really the key area to watch out for to see if breadth comes back into the market and the market finds support. And then same with the NASDAQ, similar story. But it is definitely constructive that the divergence was resolved. CNF fear and greed back to neutral. So from this indicator, there's not a lot of euphoria yet, but AAII, we came in at 52.7%, which is well above the 37.5% historical average. And then bears were well below the historical average for bears of 31%. And then finally, in September, the Fed swaps are pricing at almost 100% probability of a rate cut. So we'll have to see if that manifests itself. We do have PCE and GDP coming up this week, so those are some big numbers, and that could definitely affect these probabilities. In November, we have a 56% chance to have 2 rate cuts by then, and then by December, we're looking at about 2 rate cuts as well. So the markets, no, about 3 rate cuts. So the markets are pricing in right now 3 rate cuts by the end of the year. And we'll see what happens. The markets have been quite wrong all throughout this year and even last year too. And so Connor, you want to talk about some sectors and stocks you're focusing on for this next week?
Yep, as usual. Can you see my screen?
Not yet. One.
Yep, thanks, Ted. So as usual, I'll cover some sectors along with some stocks that I'm watching for the week ahead. So first sector is, this is WGMI. This is the Bitcoin miners ETF. And arguably this is the best group I see in the market right now. This is coming out of a big daily base, pulled back to the 21 held. So this looks really good for further upside. And the weekly has just been moving up and breaking out of this consolidation. So that looks really good. Regional banks, KRE, this was one of the strongest sectors off that CPI move, broke out of this 54.47 level. So I'm watching this sector on pullbacks, definitely top focus. ITB, same thing, one of the strongest sectors. This one's on watch for any pullbacks. Tons of strength in this move up with volume. So, and a lot of the DHI crushed earnings last week. So another reason, another bullish case for this sector. XBI, Again, strong move up, watching this one as it pulls back. Maybe it pulls back to the top of this base, which coincides with the 21 day, could be an opportunity, but you can see with this RS line, clearly money flowing into these sectors. Some ones that I mentioned before, this is software pulling back to the 50 day. We'll see if it can hold. And then cybersecurity, obviously there was the CrowdStrike thing last week, but this is pulling back to the 50 day, see if it can find buyers. And then OIH, this is oil services, popped again last week. Maybe if this pulls back to this pivot or the 21 day, but these are top sectors that I'm seeing right now, getting some rotation. So the ones that have had big moves, definitely keep on watch for pullbacks. So we'll get into the stocks here. MSTR, this fits the Bitcoin miners theme. This is broke out of this base on Friday with big volume. It was up 14%, and this looks great. They split August 1st, so we'll make it more accessible for a lot of retail investors. Coinbase, again, great base. This is breaking through this downtrend line, seeing that RS line pop up. And on the weekly, this is beautiful base. And then monthly is almost like a big cup and handle base. Irene, this is another Bitcoin miner. This had a bullish reversal off the 50 day. So this one's a good one to watch. And as you can see, it almost retested this prior breakout zone. And you got a pretty steep downtrend line here. So that's another one in the group to watch. Robinhood's another one. It's not a pure Bitcoin play, but I think I mentioned this stock almost every week, but it just continues to act really good. It rejected those highs 2 days down into the 21 day, but this one continues to act like a leader. Toast, so it's been chopping around in this big stage 1 base, but finally starting to break out. I think it closed over 28 would be big, and that would confirm, but this got some upgrades last week, and this just has been going sideways for quite some time. So once this gets into stage 2 uptrend, maybe it can start to get velocity and power in the move. But overall, good name, good numbers, and this payment processor industry group is starting to work its way up. TMDX, 50 days caught up to price here, and this has just got a good, pretty solid base. I think this one needs volume through 150, 154 to confirm the breakout, as it's had a few failed breakouts for now, but strong move off this earnings gap here. Now the 50 days finally catching up, offering a pretty good risk to reward. And then this medical products industry group is one of the better acting groups of the market right now, and they obviously had great earnings that propelled that earnings gap. ServiceNow, if software is going to bounce, this one looks like one of the leaders in a huge base on the daily. A lot of volatility in this space, but this is pulling back to the 50 day here. So, if it can pop back up into this 800 Livermore level and then digest for a move higher. If we look at the weekly, big weekly cup and handle as well. So, in this one, this is a clear leader with great consistent numbers. LMTH, on the topic of medical product industry group, this is another one. This had a super powerful earnings gap, day 2 higher high. Now this is finally might be offering an opportunity. It's pulling back to the 8 EMA. Volume's been, not super light, but not super heavy on this pullback either. And if we look at the weekly, the character of this stock has shown that it likes to continue after big earnings gaps. Here's a great example. It gapped up over 50 and then trended all the way to 80 before taking a rest, but consistent EPS beats. So this one is on watch as a pullback buy. DHI, this is DR Horton. I mentioned the strength in home builder stocks, and this had a powerful reaction to earnings and largest volume since the base. And yeah, these have done a whole lot of nothing for quite some time. You can see the RS line just straight sideways or down, and then on the weekly, but overall, when you zoom out, this is a big weekly base, so we'll see. And then if we look at some of the other stocks in the group, you have Toll Brothers sitting right at highs, KBH sitting right at highs, might pull back to the top of the pivot. PHM is another one. And yeah, so this group looks great. Square. So this broke this big downtrend last week, and you can even argue this is a Bitcoin angle too. And now it's pulling back to this power three. If you see all the moving averages, all the moving averages are super bunched together right here. So this expectation would be for this support to hold. And on the weekly, this is still in a stage one base, but it is offering a good risk to reward inside the base. And then, over this 80 level would be the confirmation of getting back into a stage two uptrend. Apple, obviously, NASDAQ has corrected about 5% from the highs, and a lot of the tech leaders have been gotten hit. But this one, Apple has pulled back very orderly, very light volume on this pullback. It's sitting right at the 21-day, 220 is a pivot from here. And yeah, this one's pulling. I like how this one's pulling back on low volume, and this is showing more RS versus the other tech names as they're pulling back. So maybe this undercuts the 21-day and then comes back through. But obviously, when we look at the weekly, this just broke out of a big weekly base. So expectation would be for continuation higher. Owen, this has been a tricky one. It had a steep sell-off here, and then just last week it started to reconfirm higher. On the weekly, it came right back into that base high, bounced sharply, some solid volume. So this one's back on the watch list. The one thing is it doesn't have a lot of group strength. Crocs, this is leaking lower. Deckers, another one leaking lower below the 50-day. So obviously Owen's the strongest one in the group, but we'll see if it can continue with a weak backdrop of other stocks. And then IoT, this is pulling back to the 50-day. This is in a big range still, but the strong rally here after undercutting and reclaiming the 200-day. And this fits with the software enterprise industry group. And we'll see if it can, reverse off this 50-day and then come back into those highs. So, yeah, that's some sectors and some stocks to watch for the week ahead.
All right. Connor, can you see the earnings whisper screen?
No.
You can't? Give me 1 second. All right, good stuff, Connor. So we'll just quickly go over earnings and the economic calendar as usual. I'll just go, we're in the middle of earnings season and it's really starting to heat up. I'll just go over some of the big ones. Tuesday before the open, we have Spotify and UPS. After the close, we have Tesla and Google. So that's definitely a pretty big day there. Wednesday before the open, we have VRT. And then Wednesday after the close, we have Chipotle, ServiceNow, IBM, VKTX, and CLS is a smaller one. Before the open Thursday, we have American Airlines. And then after the close, we have Deckers, we have Dexcom, and those are some of the ones we're watching and keying in on for this week. In the economic calendar, another week of two relatively big numbers, actually one really big number, and that's the PCE index Friday, which is what the Fed says they focus on in terms of gauging inflation. And then Thursday, we have GDP as well. All right, Connor, do you have anything else?
Nope, I do not.
All right, sounds good. So as always, we're going to wrap this video up here. You can reach out to me at ted@revereasset.com. You can reach out to Connor at connor@revereasset.com. You can also reach out to Dan and Don at revereasset.com. And you can call our phone as well. And that is 855-REAL-WEALTH. Hold on. Give me one. That is 855-732-5932. We named our flagship portfolio GROTECTION. And so our goal is to participate when the market is in uptrend and protect capital when we're in downtrends. And if you're interested in becoming a client, please reach out. And with that said, we're going to wrap up this weekend's video. It is Sunday, July 21st. Now it's 3:15 p.m. This is Ted Zhang and Connor Bates with Revere Asset Management telling it like it is. Thank you for listening and have a great weekend. And we'll see you guys next weekend.